Class 12 Accountancy Numerical Problem Solutions, presented by edxit.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Past Adjustments Solutions, Problem 41 Solution. The problem statement is as follows. Azad and Benny are equal partners. Their fixed capitals are 40,000 rupees and 80,000 rupees respectively. After the accounts for the year have been prepared, it is discovered that interest at 5% per annum as provided in the partnership agreement has not been credited to the capital accounts before distribution of profits. It is decided to make an adjustment entry at the beginning of the next year. Record the necessary journal entry. So, as per the problem, we have to record the necessary journal entry. As you know, we can record the adjustment entries in two methods. In the first method, we do this through the profit and loss adjustment account. In the second method, we do this directly in the partner's capital or current account. By the way, as it is explicitly specified in the problem that the capitals of the partners are fixed, we are going to use the fixed capital method in solving this problem. So, here in this second method, we will use the partner's current account for posting any entries, not partner's capital account. Now, it is given in the problem that the interest on capital has not been credited to the capital accounts. By the way, here it is specified as capital accounts, but we can consider this as the interest on capital has not been credited to the partner's current account. So, if we follow the first method, we need to make multiple entries in the journal. Now, as it is explicitly asked in the problem to record the necessary journal entry, indirectly it means that we need to use the method which requires only one single entry. I repeat, this is another way of saying that we should use the method that makes the adjustment through only one entry. This is nothing but the second method, in which we record all the adjustments in the statement showing the net effect of past adjustments, and finally we record only one journal entry in the journal. Now, as it is specified in the problem that the interest on capital was not credited to the capital accounts, let's first calculate the interest on capital in the working notes. Let's first write the header interest on capital. Now, the capitals of the partners are given as 40,000 rupees and 80,000 rupees respectively. As these are fixed capitals, we can consider them as the opening capitals. Also, the interest on capital is at the rate of 5% per annum. Considering this, the interest on partner Azad's capital is equal to his capital amount of 40,000 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel both the zeros in 100 for 2 zeros in 40,000 rupees. Now, if we multiply the remaining 400 rupees and 5, we get 2,000 rupees. This is the interest on partner Azad's capital. Now, the interest on partner Benny's capital is equal to his capital amount of 80,000 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel both the zeros in 100 for 2 zeros in 80,000 rupees. Now, if we multiply the remaining 800 rupees and 5, we get 4,000 rupees. This is the interest on partner Benny's capital. As this is interest on capital, we should post this on the credit side of the partner's current account. So, let's record this in the statement showing net effect of considering past adjustments. Let's have the columns for details, amount in rupees for partner Azad, amount in rupees for partner Benny, and finally total amount in rupees. In the details column, let us first write amount which should have been credited by way of interest on capital. This is the amount which was supposed to be credited but not credited. For partner Azad, this is 2,000 rupees credit. For partner Benny, this is 4,000 rupees credit. Now, the total of these two credits is 6,000 rupees credit. With that, we have completed considering the interest on capital which was not credited earlier. Now, as this is the only entry that was not considered before the distribution of profits, there is one thing that we should understand here. There is no change in the total net profit. The only change is the form in which it should go into the partner's current account. These 6,000 rupees should have gone into the partner's current account in the form of interest on capital. But it is created in the partner's current account as distributable profit according to their profit sharing ratio. See, we have wrongly created the partner's current accounts. To correct this, we should debit the partner's current accounts. Now, you might have a question that why should we debit? See, there is an overcredit of the profit share amount in the partner's current accounts. To reverse this effect, we should debit the partner's current accounts. Now, as you know, these 6,000 rupees were wrongly distributed to the partners in their profit sharing ratio. So, let's find out how this amount was credited to the partner's current account in the form of profit share. Now, it is given in the problem that the partners are equal partners. This means that they share the profit in equal ratio. In other words, they share the profit in the ratio 1:1. So, using this ratio, let's find out how these 6,000 rupees were distributed to the partners as profit share. Let's first write the heading loss sharing as per the loss sharing ratio. See, here it's not actually a loss. It is decrease in the profit share to correct the overcreated profit share. You should understand it this way. Now, for partner Azad, this is equal to the total overcreated net profit, which is 6,000 rupees multiplied with his profit or loss sharing ratio 1/2. Cancelling with 2, 2 ones are 2, 3,000 are. The result of this calculation is 3,000 rupees. This is the amount of profit share that should be debited from partner Azad's current account to reverse the overcreated profit share. Now for partner Benny, this is equal to the total overcreated net profit, which is 6,000 rupees multiplied with his profit or loss sharing ratio 1/2. This calculation is same as the calculation that we have done just now for partner Azad. So the result of this calculation is also 3,000 rupees. This is the amount of profit share that should be debited from partner Benny's current account to reverse the overcreated profit share. To correct this, we should debit the partner's current account with these amounts. So let's write the description of this entry as the amount that should have been debited by way of profit. This is 6,000 rupees divided in the ratio 1:1. See, we usually don't debit the profit. We credit the profit. But here we wrote that this is the profit that should have been debited. This indirectly means that we are reversing the overcreated amount. I repeat, indirectly this means that this much amount should not have been credited. Here we are considering the not crediting as debiting. In other words, we are reversing the effect of overcreating by debiting. That said, partner Azad's current account should be debited with 3,000 rupees. Partner Benny's current account should be debited with 3,000 rupees. Now the total of these debits is 6,000 rupees debit. And now finally, the required adjustment that should be made is calculated. This is the difference between the item 1 and item 2 above. Now for partner Azad, the difference between 2,000 rupees credit and 3,000 rupees debit is 1,000 rupees debit. See, this much amount is debited because overall this much amount of excess was created earlier to this partner's current account for partner Azad. Now for partner Benny, the difference between 4,000 rupees credit and 3,000 rupees debit is 1,000 rupees credit. See, this much amount is created because overall this much amount was shortage and was not created earlier to this partner's current account for partner Benny. Now after preparing this table, these final required adjustment entries will go into the journal. So let's first prepare the journal format. Let's first write partner Azad's current account as the debit entry. Let us also write the text DR to indicate that this is a debit entry. Let's then write the debit amount of 1,000 rupees in the debit amount column. Leaving a margin, let's write partner Benny's current account as the credit entry. Let's then write the credit amount of 1,000 rupees in the credit amount column. Let's then write the description or narration of this transaction as being adjustment made to the profit for omission of interest on capital. If you notice here, we recorded all the entries in partner's current account. No other account is touched. So with that, we have completed the recording of the adjustment entry with the second method to record the adjustments directly in the partner's current account. And with that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.